Welcome back to Alkaline TV. This is Douglas Dennis. This is the Daily Doge. And yesterday I didn't post a video. Usually I don't post on Friday, but I do 5 days a week. So I couldn't let myself go without getting that fifth one done. Hope you enjoy and thank you for all the recent comments and feedback. If you want to see anything specific, let me know. So this is basically what I've been counting the last few videos, and let me zoom out a bit. This is the 5 minute, but it's hard to see everything, so that's a little bit of a better example. Well, let's start on the daily just for the new people to see. I thought I deleted these. My chart must not have updated. So this is what I had before. Basically this was 1, 2, 3, 4, 5, and this is the correction after 5. If you're not familiar with Elliott waves, I have videos on it and I have a playlist, so check that out. The link is in the description. And as we can see, I had drawn this several days ago or weeks ago, and I had drawn this buy zone. Look at that, came right down to the buy zone, and look at that, came down and almost touched this white line. So this is the moving average. The white one is the 144. In this case, since it's a day, this is the 144 day average. This came back down and almost touched it directly, and it also coincided with this box. It also coincided with this is going from the bottom to the top of this wave. And it came down to the, well, it came down past the 0.618, and it didn't quite go all the way down to the 786, but as we can kind of see, what I had drawn the other day looks to be coming true, doesn't it? So this E might be right on the 0.786, or maybe it'll just go right below a little bit. You know, I could have drawn it a little bit off or something. It could squeak down below and touch the bottom of that channel. That's what I'm expecting. And it will go, it's going to slice all the way back through the buy zone. So it could go, I mean, it could really go down way more than anyone's comfortable with. But I'll keep the buy zone there just because if it goes down below it even more, that would be the extra buy zone. For me, anyway, don't do anything that I'm doing and then blame me for it. I'm not a financial advisor, and I'm not telling you what to do. Crypto is risky, I think. I'm trading it anyway, but I'm not going to lie and say that it's a great investment. I think you could make some quick cash, but sometimes trying to make money quickly can burn you badly. And a lot of people find that out when they're young. I am not so young anymore, and I've already been around the block and started more than 10 businesses and so on. So I know what kind of risk I'm comfortable with, and you need to get to know yourself so that you don't get into anything. You don't want to get in just because other people are in. It might be, they might be good at it and you might not. But if you are if you're interested in it, you can learn for free a lot of times or buy some books. I recommend Elliott Wave Principle. And it's probably going to be $5 for a used book. You don't have to gamble or invest your money in anything. You can just stay on the sidelines and watch. You could watch these charts for a year until you feel confident, even more than a year. I mean, getting the skill, I think, is more important than jumping in. You might get lucky and ride a wave up like that, but if you don't know what you're doing, you might also have to ride that wave down. So yeah, if you're lucky and got into one of these bull market blasts, that's great, but you don't want to make money from luck unless it's hundreds of millions. Then it's fine. But if you want to make consistent money, then you're going to need some kind of skill or awareness of what's going on. Or you're just going to have to be the luckiest person ever. But for me personally, I'm not banking on that. You can create your own luck by learning. So the last few videos, I marked this out. Basically, this was it won't let me. This was a 1, 2, 3, which was A. Then it was a 1, 2, 3, which was B. Then 1, 2, 3, which was C. Oh, it didn't quite touch. And D, if that's over with, didn't touch either. It might not be over, but I'm thinking it is. 1, 2, 3. If this pops up again, then I would just move it to here and move this over. But this was where I had it. This came up and then went back down. I think that might have been the top of D. So I'll lower it down. Come on. Lower it. Lower it down here. I usually don't have to be so precise, but since I'm making a video for you, and some of the people are beginners. Okay, so what is this then? What are we at right now? That's what everyone wants to know, isn't it? Well, this is probably a 1. Actually, judging by that 1 right there, 1, 2, 3. That could be it, and then the 2 could come up. And there's no room for me to something like that. So I just made a quick trade. I'll show you what it was in a second. I'm out of it already, but this would be, I mean, wow, if it goes down to 13 cents again, that's going to be exciting. It's at 36 right now. So, I mean, it doesn't look that far on this chart, but that's 20 cents? More than 20 cents? That's a lot. That's more than half from what it's right now. So that's going to be a brutal hit, but that's only if you sell down there. If you wait until it pops back up, this will probably be a sharp bounce then once it hits that. So I've been trading the RSI, which I must say has not been fun all the time. So I'm going to provide some other ways for you to swing trade. Also, I'm going to delete all these ABCs because that's probably confusing. But I played this bump right here. And, you know, that one, it was oversold. And it was coming down. If you zoom in really close, you can tell the RSI, which means relative strength index. And I did some videos about this. Let me get a pen so this right here dropped, that first dip down coincided with like this right here. And then it dropped again for that. And then it's hard to see, but dropped again for that. So on that third one, I was getting alerts here. You can see my alert. When it dips below this, it gives me an alert. Now, I don't buy on every alert now because I got burned on some of these. Like, look, like that little dip right there up to here. Yeah, that might have been a decent trade from 38.6 from 38 cents and a half to 39 and a half. Ugh, but that's tight. You would have to be very careful to get in and get out at the right time, or you're going to be hurting. So even though I did make videos about how to trade the RSI, if it's in a bear market, or if it's going sideways like this, then it can be not that profitable. So, but look at these big dumps. That would have been great right there. If you see on the RSI there, it's down there, which coincides with this. But then the next time it went down, it didn't go as far, and it went farther here. That's what the signal is. It's going up and going down. These were going up. These were going down. Does that make sense? But it's best after a large fall, because you can expect a large bounce. And then you might want to exit right here. Instead of, you could wait till there, would be ideal. But when you're in a bear market playing with fire, from here to here might be all you want. And if you caught it at the very tip of the bottom, then you could easily get out right there. And you could even get back in there and back out there, but that's, if you're counting Elliott waves, then it's more advanced. So that's a little bit about the RSI trading, but it's not always easy. However, when my alerts start going off, ding, and then a second ding, and then a third ding, a third alert went off for that third one, and I was like, that's gotta be a decent bump. So I got in down here at, I don't know, 33 and a half. This chart is for this chart is for Bittrex, and I'm not trading on Bittrex, but I'm just using their data. So it was a couple cents off, but I got in at like 34 and a half maybe, and then I got out at 37 and a half, which on this chart it didn't even go up there, but on whatever I was trading it went up to 37.5, and I got a 2.5 cent boost, which is a lot. 2.5 cents is a lot when you're under $1. It's 30 cents, so 2 cents is almost 10%. But just in like a couple minutes, I made a trade and then I got out, because I'm expecting that. Expecting this C wave. So I don't really want to ride that down with all my money in there. I might play this B, but I might have already played the B, and then the B might just continue forever. Might continue like this, kind of like that B in the middle. See, there are subwaves. I'm not sure exactly where this is going to go. That would be nice. But if that happened, I would question if it was really that and not this. But I'm pretty sure this is done. Pretty sure this is the next wave down. And there's a nice clean 1 wherever this ended exactly, 2, 3. That was a subwave of that A. These are threes inside of threes. Does this make sense? Let me know what you think in the comments. Let me know if you have any other requests of other coins or stocks even that you want me to do an Elliott wave count, and I'll see what I can do. It's pretty fun for me, honestly, especially if it's some stock or crypto that I don't have any money in right now. Then I'm non-biased and I can just give a clear reading of it without the emotion of having my funds attached to it, which sometimes can cloud your thinking. You know, be honest. My background is in psychology, and these Elliott waves are tracking human psychology. I know it doesn't look like psychology, it looks like a bunch of math, but it's psychology. Anyway, I'm going to get rid of these subwaves just to see this A, B, C, D, and E. This could be done here. C could have been the end. But then we have these three waves still. So we had these 3, 3, 3. So I don't think that was the end. And if you have a 3, 3, 3 correction, as I showed in a couple videos ago, it doesn't look like that. It would look like more like this, where it would either be flat or something like it, or go above, like, and below, like this. But that's definitely not what this looks like. This looks like a descending. So, oh, actually, I'm seeing something that I didn't see before. This could be a descending triangle, which is what I was saying. So what it would be, this channel wouldn't necessarily be there. It would be more like these would be clamping in. Yeah, that's probably more like it. Ooh, I'm glad I saw that, because now that E wave, you know, C had a wick, but really it looks like that could have been it. So maybe you bring this out a little. And then, you know, I'm leaving just the wicks poking above. But yeah, just except for these wicks, that looks pretty clean. And then let's zoom in a little more. I've got to delete these little things I drew, because now they're in the way. Erase. Okay. All right, so this could possibly A, B, C. It might come back into my buy zone, but it might not be as far as that channel goes. The channel I had drawn, since the top of the D missed it and the bottom of the C missed it, then this could be a little deeper right here. Sometimes my freehand drawings end up being really accurate. But that is what I would be looking for, this 0.618 Fibonacci line. And if it just wicks below it and then pops back out, you know, this might be quick, the dip back down in there. And I've got to bring this, that's the E wave. that might be what happens. It might dip a little lower than the channel. It might spill out of the channel. Well, this isn't really a channel. This is a descending triangle or a reverse. Is it a reverse? No. It looks like a descending triangle, but in a descending triangle, the bottom is supposed to be flat across. So that channel that I had might be better. We'll see how far that E drops. You know, it can be hard to catch it right on the bottom if it keeps falling, but I'm going to attempt to. You don't have to. Again, don't do things that I did and then, because I could be selling it and then not telling you. So be careful trading from other people's videos. You should do the research yourself so that you can read Elliott waves yourself, and then when you watch the video you can just compare, but you don't have to make a decision based on someone else, because my risk profile might be different than yours. The amount of money I have in there, or fiat currency that I have in there, might be different than you. So, and you know, I could be busy and miss a trade or miss a video. So those are some reasons why you want to raise your awareness and educate yourself so that you can see these yourself rather than just rely on other people, because that puts you in a helpless position. And the reason you're probably trading crypto is because you want to be your own boss and you want to be in the control of your own currency. I'm just guessing. All right then, I think that's it for this count. We'll see how far this drops, and it's going to be exciting. That might be, I mean, once it does finish that E, which might take forever, I mean, this sideways action right there took all day and night yesterday, and it felt like a week, even though it wasn't. So this could take a while. Or it could, like this one right here, it could just go whoom. We'll find out soon enough. In the next day or two, this is going to be, in the next few hours, this is going to be interesting. And then if this is accurate, if this count is accurate, after this E, whether the channel was right and it drops farther or not, I am expecting a reversal of some kind. So you should be seeing some kind of signs on the MACD, on the RSI, that would suggest a trend reversal coming. And if it goes back to 20 cents or so, that would be awesome. Because then it might rocket right up to, 60 cents or something, and that would be tripling your money, even before it makes a new high. That's insane. But, like I keep saying, trade at your own risk, and have an amazing day on purpose. Trust nature, and go alkaline. And I'll see you in the next video. Peace.